Welcome to Global Dispatches, a podcast about foreign policy and world affairs. I'm your host, Mark Leon Goldberg, editor of UN Dispatch. And in this show, we discuss topical global issues, have conversations with foreign affairs thought leaders and newsmakers, and give you the context you need to understand the world today. Go to globaldispatchespodcast.com to learn more. And now on with the show. Today's episode was recorded as a live virtual taping of the podcast in partnership with the group Young Professionals in Foreign Policy, YPFP. The episode features my interview with the Middle East energy policy expert Mohammed Soliman. We discuss the impact of COVID-19 and slumping oil prices on the politics and economies of the Middle East. Mohammed Soliman is a non-resident scholar with the Middle East Institute and a member of the McLarty Associates MENA practice. We kick off discussing how wealthy Gulf states like Saudi Arabia, the UAE, and Qatar used their oil wealth in the wake of the Arab Spring to shore up domestic stability and pursue their regional foreign policy goals. We then have an extended conversation about the ways in which COVID-19 and low oil prices are shaking up the foundations of the geopolitics of the Middle East. After my interview portion concludes, Jeffrey Nam of YPFP reads questions submitted from the audience. And a big thank you to Jeffrey and Colleen Moore of YPFP for organizing the event. If you are with an organization and would like to partner with the podcast for a live virtual event, please send me an email. I'd love to hear from you. I love doing these events, and a big thank you to YPFP, which is a great organization, for partnering with the show around today's episode. And now here is my conversation with Mohammed Soliman. Thank you, Jeffrey, and thank you also to Colleen and to all of YPFP for letting me host this virtual taping of the Global Dispatches podcast. And I should say before we start, back when I could more credibly be considered younger, I was a member of YPFP in its very early days in 2004, 2005, 2006. So I'm very glad to be returning to you. And this is actually the second live taping with YPFP that I have done over the course of this podcast. We did one about 5 years ago with an Assistant Secretary of State in the Obama administration, Sarah Sewell, who we did a live in-person event. This was, of course, before the pandemic, and it was at the outskirts on the sidelines of the UN General Assembly that year. So I'm very pleased to be returning to YPFP and bringing this conversation to you. So as Jeffrey said, the first 20 minutes or so will unfold as a kind of conventional podcast episode. I'll be asking Mohammed a number of questions about the topic at hand, and then we're going to open it up to you for questions. And I really do want to encourage you to ask questions. To me, I always love hearing what is on your mind, what is on the audience's mind. So do feel free and do feel encouraged to chime in with questions, and we'll get through as many as possible after my portion of the conversation starts. So let us begin. Thank you again to Mohammed. And Mohammed, I wanted to start this conversation by having you paint a picture, paint the scene. How did Arab states use their wealth, use their oil wealth in the years around the Arab Spring and the years following the Arab Spring? What did the world of petrostates look like in that period?
Thank you, Mark, Jeff, and Colleen, also for working for this event. Let's rewind the tape a little bit. 10 years ago, mass protests erupting in Tunisia, Cairo, Sana'a in Yemen, in Damascus. People from these countries want social welfare. They want democracy, freedoms, and successfully removed regimes. Successfully, there is already a well-established democracy in Tunisia. Someone can argue. Egypt already has been through the transition. So there was a lot of movements happening, a lot of change happening, a lot of turbulence, a lot of uncertainty about political systems. And most of the revolutions and movements at the time were mostly in republics, North Africa, Levant. But the scene in the Arab Gulf was different. We're speaking about countries that have benefited from what we call the 10 golden years. When the oil prices exceeded $100 per barrel, that meant that all these countries accumulated a lot of wealth, a lot of foreign reserves. For example, Saudi Arabia for some time had around $900 billion, close to $1 trillion in foreign reserve, massive. So what do you do if you're the monarch of Saudi Arabia or the UAE when you see the regime of Hosni Mubarak is falling apart because of protest? You deploy your sources, your resources, you deploy your finances to support local economy, offering jobs, increasing wages, food subsidies, oil subsidies. You want to do stuff that makes your own people happy. If you are keeping your people happy, no one really go to the streets. This is how basic it was. And we have seen that in 2011, Saudi Arabia deployed around between 130 to $200 billion on social programs, jobs, construction, giving contracts to local businesses. Similar thing happened in Oman, in Bahrain, in UAE, and Kuwait. All these countries have used the wealth. Other than Bahrain, which is tried to do the same, but they have a lot of demographic problems, Shia Sunni divide. All the countries actually avoided similar path. And then when we move to 2012, once they're stabilized their own societies and all the Arab Gulf societies are already okay, and the Arab Gulf states made sure that there's no sort of discontent or a revolution in the Gulf. What you do next? You basically try to support governments and stabilizing capitals around the region. What I call the shadow central bank of the Middle East. And this is mainly Saudi Arabia, UAE, and Qatar, and Kuwait to some extent, supporting different countries because they already have their own ideological differences. I will stop here and I'll let you ask.
Yeah. So after having stabilized their domestic societies by boosting spending, they shifted towards foreign policy issues, and of course there has been over the last several years this grand competition across the Middle East, principally between Saudi and UAE on one hand and Qatar on the other. Give some examples about how those countries used their wealth specifically, their oil wealth specifically, to advance their foreign policy goals.
So that's a divide. It was always there since late 1990s and maybe into 2000s. It was significant, but there was still some sort of silver lining. It was some sort of friction, tensions between Doha, Riyadh, and Abu Dhabi, but not to the extent of a Cold War at this point. Doha always tried to portray itself as a power of change, that it's the capital that's standing behind social movements or Islamist Muslim Brotherhood groups around the region. But Abu Dhabi and Riyadh are much more traditional, much more for status quo, stability, and we don't really need for change. This is how basic the competition was, and you can see this in Tunisia, you can see this in Cairo, and you can see this in Libya. In Cairo, for example, the three countries were completely at opposite sides. You have Doha, where main backer for the Muslim Brotherhood, 1 year term President Mohammed Morsi between 2012 to 2013. But once the transition happened in 2013, and then General Sisi took over, you see Abu Dhabi and Riyadh and Kuwait supporting Sisi financially around between $30 to $50 billion to stabilize the Egyptian budget. Similar scenario happened in Tunisia. The divisions of Tunisia are high, the tensions are high. Today, and in Libya, you can see this very apparent. You see the fight between Tripoli and Benghazi, and each city has its own regional backers.
And I remember I did a podcast episode, just this past summer, so before anyone could have predicted COVID-19 and the economic fallout, that looked at, for example, how UAE and Saudi Arabia and Qatar were supporting various sides in all sorts of conflicts, even outside like the immediate Middle East, to places in, say, Sudan. Which has been undergoing a bit of a revolution. So it's just kind of interesting to sort of remind people, I think, that we had this kind of Cold War and these proxy battles happening across the region that were supported by opposite sides in that Gulf divide. But of course, then COVID-19 hit. And what I'd like to do with you for the bulk of this conversation is unpack the ways in which both COVID-19 and also the sharp drop in oil prices has impacted regional politics. So with that, let me just ask you first on COVID-19, what have been some of the economic repercussions of COVID-19 across the region, and how has that manifested itself?
Of course, I will start by the Gulf. The Gulf is, as we describe the Gulf countries, they are rentier states. Their source of wealth is mainly petrochemicals, oil and gas, sales to Southeast Asia and the European markets. And when COVID-19 happened, there was a mass destruction of both supply and demand. People are not consuming and people are not producing. And that has been there, let's say, half of the first quarter and almost the entirely second quarter. That affected badly the Gulf. Because, first of all, the Gulf budgets are very dependent on the oil prices, on the oil sales. A country like Bahrain needs $91 per barrel to stabilize its own budget. Saudi Arabia needs around 80s, Dubai around 70s. And the least, like, for example, Qatar.
That's called like the break-even point or something like that, right? There's a term of art that the IMF has for that.
Yeah, the break-even number that basically
that oil price per barrel has to be at a certain number in order for these governments to maintain their domestic spending.
100%, and to make sure that they're not running deficits with their budgets. So, and as you remember, and everyone have seen the news, that the oil price has been really sinking. We're only right now, we're just pumping up to mid-40s, but a month ago or 2 months ago, we're speaking about $20, $22. This is not sustainable. And for the first time, we're having these wealthy Gulf countries are talking about budget deficits, cutting wages, cutting jobs, restrictive fiscal policies. Some countries like Oman, for example, that used to be a very wealthy country, want to tap into the debt market and get support for its own budget. So it tells you more about the new dynamics in the Gulf. So instead of having that mass wealth that you can deploy overseas supporting Morocco or Pakistan or Horn of Africa, right now we need this money. You need these finances to support your own local economy and make sure that your population is happy. Because you cannot really even if, let's be frank, there is no political systems like actual representation in Arab Gulf countries. It's basically, it's a simple equation. You offering food, you offer supplies, you offer wages to your own citizens, and everyone is happy. You don't ask about politics, you don't ask about democracy in return. So that means that instead of expansionary foreign policy and supporting allies everywhere in the region, that all these finances will be directed domestically.
So, in addition just that the hit on demand that COVID-19 imposed around the world, because people, weren't driving, weren't, in need of oil that countries in the Gulf were producing, there was also, surprising to me, this incredibly toxic relationship with Russia that manifested itself between Saudi Arabia and Russia in particular in an OPEC meeting that resulted in an oil price war that further drove down prices of oil. Can you describe what was that price war, what triggered it, and what has the impact been in the months since this happened in March, I believe?
Let's think about Saudi Arabia as the central bank of the oil market. It's the biggest country when it comes to spare capacity. When it comes to how low they produce oil, they only need few bucks to produce one single barrel of oil. So that makes them always an advantage to take the lead and basically impose certain agendas. And for 30 and 40 and 50 years, specifically in the 1973 war, Saudi Arabia has been taking the lead to drive the oil policy globally. This started to change in the last 20 years. We have something called the OPEC Plus, the non-members of the OPEC cartel, and you have the shale industry in the US. All these are the new trends for oil. So you had a lot of countries that are not part of the oil of the OPEC production plan, who are producing and selling, that means that Saudi Arabia is losing a lot of market share. The main competitor in this was basically Russia. Russians have been selling beyond their capacity. They were not willing to negotiate for a settlement with Riyadh, and as we have seen, Riyadh wanted certain kind of finalizing deal in March. Russians walked away, and then we all know what happened. Then that Riyadh decided to open its own taps and sell oil at cheapest prices that we have ever seen.
And it was basically because they wanted to undersell Russia in an attempt to get their oil to the Chinese market.
And exactly, captured market share. Mm-hmm. It was only and exclusively about market share. And Saudi Arabia was saying, I have my foreign reserves. I can handle the pain for as long as I can. But in the meantime, Russia cannot. And that was the gamble that arguably succeeded. That because of the Saudi resiliency and flooding the market with cheap Saudi oil, Moscow couldn't really handle that further, and then eventually had some sort of US-mediated, US-sponsored, US-pressured deal, whatever you can call this.
Mm-hmm. But the end result still is sharply lower oil prices, and even though they're trickling back up a little bit right now from their lows a few months ago, they're still very low. So, yeah, go ahead.
The reason is very basic. COVID-19. When COVID-19 happened and there's destruction of production, there's no production. No one's producing. No one can go to a factory. And the stop of flights, shipping, all the things that you need oil for came to a sudden stop. That sudden stop meant that there's 20 million barrels a day are not consumed. And when this deal happened, it only eliminated 10 million barrels at the time. That means that you still oversupply with around 10 to 12 million barrels. So you don't need to do the math. It basically tells you that there's plenty of oil in the markets, and no one there to consume.
So you described earlier how Saudi Arabia historically in the boom years used its oil reserves to fund foreign policy objectives. How has this sharp decrease in oil prices impacted Saudi Arabia's foreign policy and impacted regional politics more broadly?
I think there is no better example than Lebanon at this point. Lebanon Saudi Arabia has been very supportive of Lebanon financially since what we call a Ta'if agreement that ended the Lebanese civil war. And Lebanon is a small country. Its own economy is based on services, not really that major economic sectors that can really sustain the economy. Lebanon has been in economic turmoil for the last 2 years, and we all have seen the demonstrations in Lebanon that started last year around October and November. And just before COVID, the Saudi finance minister and the French finance minister, both of them were meeting on the sideline of G20, and both of them were talking about bailing out Lebanon, supporting Lebanon, that we always stood by Lebanon. That was late January, early February. And then now you can imagine what happened to this conversation. That conversation was never revisited because you cannot really do this anymore because you need to restrict your finances. Lebanon defaulted. Lebanon couldn't pay its 1.2 billion euro bond for this year. In negotiations with the IMF, things do not really look well. And you have huge political disarray in Lebanon. No one knows what's happening. So that's Lebanon. Second country.
I should say, just to plug my own podcast, I did an entire episode on Lebanon's economic crisis in mid-May, at the time in which they were in negotiations with the IMF because, as you said, Saudi Arabia and France were no longer willing to bail them out. So what's another? So Lebanon's a good example. What's another example?
I think Jordan, to some extent, is a good example. It's a country that doesn't same thing. It's a country that has a lot of economic problems. Doesn't really have a robust economy, doesn't really have commodity, single commodity that's selling like the Gulf countries, and has been a main beneficiary from Gulf wealth somehow, whether expats sending salaries to Jordan, whether direct financial support from Riyadh and Abu Dhabi and Doha to King Abdullah and Amman, uh, all these factors are changing. We have seen expats returning home. We didn't see any kind of initiative coming from the Gulf to support the financial needs of Amman, of Jordan. Jordan needs to pay at least 1.8, $1.9 billion this year. And so far, we have no idea how Jordan is going to finance this. Still, the country is stable, but there's some sort of dissatisfaction. And we're speaking about a country that's filled with millions of refugees, whether they're Iraqis or Syrians. And it's a country that has witnessed mass protests across different years for the last 3 or 4 years.
And of course, one of the U.S.'s more staunch allies in the region as well. I wonder, what about Yemen? Yemen is sort of one of the prime examples of MBS's assertive foreign policy. And it seems since the start of the year, the conflict and since the economic crisis that COVID-19 has brought, that Saudi Arabia seems to be reducing its investments in the military campaign. Is that sort of a fair assessment, do you think?
Indeed. Intervention is consuming a lot of resources. We don't need to do an economic and financial analysis to figure this out. The fact that you're sending troops, that you're financing Air Force, boots on the ground, and even the local militias inside Yemen, this has cost a lot and billions of dollars. No one knows what exactly is the number that Saudi Arabia is paying or already has paid for the intervention in Yemen, but some estimates talking about at least $200 million a day to finance its own operations. That's massive. That's consuming, specifically for a country that's suffering and it started to run a budget deficit because of the oil price plunge and the rest of the geopolitical changes.
So you mentioned earlier Lebanon as an example of a country that's on the edge right now because of the economic crisis in the region and its inability to turn to the Gulf states as its financial backers. I'm wondering what indicators you might be looking towards throughout the region to suggest to you whether or not this moment will be sort of profoundly disruptive to domestic stability in many of these countries. I mean, earlier you said that the reason that the way that many of these countries that have oil wealth responded to the Arab Spring was just to pump money back into their economies. To what extent are countries around the region particularly vulnerable right now to just social unrest?
I think COVID-19 accelerated an existing trends in these countries, meaning COVID-19 made countries that are struggling much more struggling. Surprisingly, there are some countries that I thought they might be much more vulnerable, but they proven to be much more resilient. I'm speaking about Egypt, Tunisia, and Morocco, specifically in North Africa. They showed much more resiliency. The international debt markets trust their economies. They have been working closely with the international financial institutions like the World Bank. Their economies sustained the shutdown. And part of that they have been doing a lot of economic reform. Egypt, for example, did a 2016 deal with the IMF. They did economic reforms. They created financial cushion that helped them to weather the storm of shutdown. And it will be the only country in the entire region with economic growth, like 2% growth this year. Part of that, they have a state-led investment strategy, so that worked. Morocco, I think, the good relationship that Morocco has with the African community, the EU, they had financial cushion, also did similar reforms. They have some sort of parliamentary system that was capable of getting popular support, made Morocco in a much more better place.
So I just want to take a moment and encourage people to ask questions. Again, you can do so using the chat box or the Q&A box. And in just a couple of moments, we'll turn to your questions. But let me maybe ask you this as a final question from my end, Mohammed. You sort of provocatively speculate and say in your piece that, this moment, COVID-19 will reshuffle the regional order and the geopolitics of the region in profound ways. What should we be looking towards to suggest to us whether or not some of these broad reshuffling and restructuring of the geopolitics of the region are underway? What are you looking towards? What indicators are you looking towards? And what might a post-COVID-19 global order or regional order look like in the Middle East and in the Gulf states?
That's an excellent and tricky question. You
That's
cornered
why I
me.
saved it to the last one, to give people plenty of time to ask their own questions.
So you asked two questions rather than one. I think the main sign that I'm looking for is what's going to happen in Libya. How much the Libya situation will change. Libya is a country where you have at least 8 different players are there, regional players, international players, and it's the country that will decide what's the status quo and what's going to happen. Meaning, will Saudi Arabia and UAE and Egypt stand strong and support the Eastern General Haftar in the Eastern Libya, or they're like, we're done here, it's not our thing? How Turkey and Qatar will react? Are they only there to sustain that Boko group in Tripoli? Are they willing to escalate further? Are they happy to just have the divisions of Libya like a federal system when you have the East and the West are somehow disconnected or part of semi-autonomous regions? What's going to happen in Libya? I think Libya is the main signal here. No one knows how Libya is gonna change. No one knows. No one. The American situation is fluid. I'm sorry, and the EU is not really sure what they want to do there. So I think Libya is the sign.
And I should say, just to stop you there, I have an episode on Libya publishing tomorrow on some of the exact questions that Mohammed just posed. I'll edit this part out of the podcast. This is just for you live folks, so subscribe to the podcast if you want to get that. Go ahead, Mohammed, sorry.
And I think the original system, or the original order, would be great decoupling. We always use the term great decoupling to describe the technological decoupling that's happening between Beijing and Washington, D.C. But I actually think that you're going to have two distinct three regions in Middle East and North Africa. You're going to have the Gulf with its own challenges, their own finances, and their own problems, and much more looking into their own specific region. And you'll have North Africa with clear North African identity, with North African problems, very detached from what's happening in the East. And the third subregion for me would be Levant. Different, much more tied to what's happening in East Mediterranean and Turkey, very disconnected from the Gulf. That kind of this kind of one hegemonous order that was there up until the Arab Spring is over. It's done. This is the end of it. You will not really have that kind of Arab solidarity that Riyadh will stand for Rabat, or Tunisia will be in a line with Beirut. That's over. These are my 2 cents.
All right. Well, thank you so much, Mohammed. Let's now turn it over to the good folks at YPFB to moderate the question and answer session. So, Jeffrey, I'm going to turn it over to you to read questions that have come in.
Great. Thank you, Mark and Mohammed, for that discussion. I definitely learned a good bunch about my Middle East politics during this climate. So I guess I'll just start off with a few questions I had on my mind. So this is to you, Mohammed, and then Mark, you can chime in afterwards. Do you have any insight as to whether OPEC Plus will extend their production cuts next month? And what are the major factors that would contribute to their decision, one way or the other?
I think no one knows. I think that's just to be very, very clear with you. No one knows. We thought that when Moscow and Riyadh are meeting in March, that we have a deal, that we are in COVID-19 era. There is a destruction of both supply and demand, and no one would risk an escalation at the time. It happened. It was a major surprise for everyone. We didn't see this coming. So I would not be foolish and tell you that we're 100% sure that there's a deal next month. We do not know yet. However, there is some reasons to believe that both Moscow and Riyadh cannot really handle another sinking prices like what happened from March until June. So we hope that the deal extends, but let's just wait and see.
Great, thank you. I have one more question. So you touched on the potential effects on the Libyan civil war due to COVID-19, but how has COVID-19 and the sinking oil prices affected specifically Turkey, and then in turn, their potential support of the GNA during the civil war?
Let me just interject for people who are listening. The GNA refers to the Government of National Accord, which is the UN-backed government based in Tripoli. Go ahead, sorry.
The Turkish intervention in Libya was not only motivated by oil. There are some ideological reasons and some strategic reasons. The ideological reasons for Ankara is supporting an ideological ally, which is the GNA, as Mark mentioned, which consists mostly from Islamist-leaning, Muslim Brotherhood-leaning political parties in Tripoli, and they are in the opposite side from Egypt, UAE, and Saudi Arabia. So that's number one. Number two is the maritime borders dispute. Turkey has a problem with every single country in Eastern Mediterranean. That includes Cyprus, Greece, Egypt, Israel, Lebanon. Name every single country there, and Turkey has a problem, which is the maritime borders. Turkey, there are a lot of gas in the area. Just to summarize the situation, Egypt started a project. It started a forum called the Mediterranean Gas Forum, which is based in Cairo. It includes all the countries except Turkey. And Egypt aims to be the energy hub, the gas hub that takes the gas from not only from Egypt but from Israel and export it to the EU. Turkey is not part of that, and Turkey is feeling that they are left out. So when Turkey decided to intervene in Libya, they had a deal with the GNA, and this deal is maritime borders, to redraw the maritime borders. That meant that Turkey literally has maritime borders with Libya, regardless of Crete and all the Greek islands in the Mediterranean. And that's a major problem. And that gives, of course, Turkey some sort of legitimacy to do exfiltration and gas rights, which is needed indeed for the Turkish economy that has been bleeding seriously for the last 4 or 5 years.
I'm looking at a map of the Mediterranean right now, and it does not make geographic sense for Turkey to border Libya, just for the record.
100%.
Do we have other questions?
Yeah, so this one's from Colleen. At the start of the COVID-19 crisis, we heard a lot about how the crisis was affecting Iran. What is the current situation, and has the economic crisis affected their involvement in other countries such as Syria, Lebanon, and Iraq?
Iran is a very interesting case, meaning in addition to all the problems that Bishop states are facing right now, they have the U.S. maximum pressure campaign. So not only that the oil prices have been sinking for the last couple of months, actually Iran cannot export oil. Iran exports around 500, maximum 400,000 barrels a day from 2 million capacity that they used to produce before the maximum pressure campaign and sell under the Iran deal, nuclear deal. COVID-19 came in. The country was not equipped. The country doesn't really have the infrastructure to withstand such pandemic. And the sanctions crippled the country's ability to buy the needed medical supplies. According to OFAC and even Secretary Pompeo made this clear, other countries can donate medical supplies to Tehran. Tehran cannot buy medical supplies. So that left Iran at the mercy of certain donors. We have seen the UAE sending medical supplies, but that was not enough. So that's just to summarize the geoeconomic situation of Iran. Also, the Iranian political leadership was reckless at the beginning. When COVID started, the Iranian leadership was aware of COVID cases, but they disregarded it and they didn't tell the public. And instead, they hold the parliamentary elections, mass concentration of people. And as you remember, this election came after the assassination of and the killing of Qasem Soleimani. So there was a lot of people in the streets. That led to a mass spread of COVID-19. Uh, Today, the country opened up. They're having the same second wave problems. It's everywhere. The trend is upward. We don't really see this trend going down anytime soon.
Yeah, let's keep going if there are more questions.
Great. So this is a question from Kayleen. If Lebanon is struggling, aren't assets cheap and ripe for international investment? What is stopping international investment from swooping in and taking advantage of these discounted assets? Compare this environment relatively to Greece. On the other hand, what is the answer to turning this around and attracting investment? What resource does Lebanon have to help their neighbors out in exchange for economic redevelopment?
I think there's a distinct difference between Greece and Lebanon. Greece, with all the structural problems that the Greek budget has, it's an EU country. It's an EU country within the Eurozone. It's part of the customs union. Eventually, you have Frankfurt as a backer. You have the European Union standing behind Greece, even though that there were a lot of problems, a lot of disagreements about the bailout. Put Greece aside, getting back to Lebanon. Lebanon has many problems. The first one is Hezbollah. Lebanon right now is being perceived as a proxy for Hezbollah, and or Lebanon equals Hezbollah, and Hezbollah equals a proxy for Iran. That means there is a gray area that every single business dealing that you have in Lebanon might be sanctioned. So when I talk to a lot of businesses, they're like very skeptical. They don't want to risk anything because eventually no one wants to bother OFAC or having OFAC freezing your assets because of violations of sanctions. That's number one.
OFAC is the Office of Foreign Assets Control, we should say, for those who don't know. It's the branch of the Treasury Department that enforces U.S. sanctions. Sorry, go ahead.
Thank you for that.
I've been doing this a long time. I know. Throw many acronyms at me. I can handle it.
So that's number one. You do not want to mess with OFAC. Number two is there is a political disarray in Lebanon. There is a disagreement in Lebanon. The usual Ta'if agreement is not there anymore, meaning that you are speaking about a government that's perceived as Hezbollah and Maronites. It's not inclusive. Sunnis are not there anymore. And people do not want to buy assets from a state that's held hostage for Hezbollah. That's basically the bottom line. And we are seeing mass capital outflow from Lebanon. And this is why there is, of course, the traditional route to go about it is imposing a capital, preventing capital from fleeing the country. And that's a big problem for international investors who want to actually take their money and leave the country if the country is sinking. And right now they are in discussion with the IMF, and we have seen a lot of resignations coming from the senior advisors at the Lebanese economy ministry because they think that this government is not taking the negotiations with the IMF seriously.
Can I ask just maybe a quick follow-up there? Is because of this perception of Hezbollah sort of, running the show and, having political power, legitimate, political power in Lebanon, how is that complicating, or is that complicated negotiations with the IMF in terms of the U.S. perhaps wanting to prevent the IMF from bailing out Lebanon? Is that a factor at all?
It's a factor. It's there, given the fact that the current U.S. administration is very anti-Iran and very strong on Iran and Hezbollah and its own proxies. And this is the administration that did one of the most robust, aggressive sanctions regime against Iran. So if you're asking me, will this be a factor? It's indeed a factor. We are not really sure how the negotiations will go, because some people might argue that if we didn't bail out Lebanon right now, can we handle another civil war in Lebanon? That's an argument. So the pros and cons of this. The country right now, as we all have seen the news, banks are being burned. There is no police regime anymore. The country is in disarray. People lost count of the exchange rate for the US dollar to the Lebanese lira anymore. It's done. The one of the most and historic universities in the region, the American University in Beirut, is slashing its funds, its own employment, and downsizing because even the American University in Beirut cannot survive this. So there are some people can argue that we should at least give Lebanon something to float the economy and making sure that we have the right conditions to prevent Hezbollah from benefiting from this bailout. But so far, everything is very fluid, and no one is aware of where the negotiations are standing today.
I think we can go for another question if there's one.
Great. So this is another question from Kayleen. What is the status behind the Saudi Vision 2030? What geopolitical forces and specifically world governments are playing for and against the prices needed for Saudi to IPO Aramco and achieve their domestic realigned investment away from oil in Saudi? So I guess this is a little bit of a two-part question.
I think there's no real answer at this point to any of the diversification plans around the region, whether Saudi 2030, UAE 2033. I think like all these plans right now are hostage to the current economic uncertainty. But to speak about Saudi Arabia, for instance, I think the Crown Prince vision is very clear. He thinks that Saudi Arabia has been behind for a long time, and this is the time for the country to move forward. And there should be structural reforms that are hard and tough. It's hard for me to see and imagine him slowing down on his 2030. Also, let's remind the people that Vision 2030 is his own fingerprint. It's basically his own plan. This is his own vision. This is how he's introducing the succession from what we call in Arabic al-aba lil-abna, from the fathers to the sons generation transition. So he will not back down from that. I think he will be selective about where to spend. So you will find a lot of Saudi, like PEF, the Saudi Wealth Fund, investing much more in technology. So right now they're trying to close a deal with GIO, a big startup in India, like $2 billion. They just purchased $10 billion worth of assets in big tech companies in Silicon Valley. So that kind of trend will increase. They were trying to have partnerships with a lot of international companies in tech and non-oil and gas stuff, retail. Boosting the demand would be one of the major priorities for the Crown Prince at this point. So again, he will be selective. He will not really back down from Vision 2030.
I think we can keep going with questions.
Yeah. So let's go with the next one then. So this is kind of following on the question about Iran previously. What is the trajectory of the Iran-Saudi contentious relationship? Where do you see it going? How do you think it was affected by both COVID-19 and the drop in oil prices?
Again, when people do not have money to support their own activities overseas, things a little bit de-escalate. This is a typical trend. I think both countries are struggling. Both countries were caught by surprise, like anyone else, by COVID-19, but also because they are bitter states. The COVID-19 had double impact on their own economies, and in addition to the sanctions on Iran, which is a bit of a bigger problem. I think other than Iraq, I don't really think you will see a lot of major Saudi-Iranian proxy war. Even in Iraq, Saudi Arabia is trying to reapproach the new government in Baghdad, trying to have a strong relationship with Baghdad, trying to introduce Iraq to the broader Sunni Arab countries and invest in Iraq. So this is where Saudi Arabia is only doing in Iraq. I think Iran is struggling. I think Iran's main problem right now is the Trump administration, fighting with the Trump administration in Iraq, trying to make sure that the U.S. forces leave Iraq. That's it. But Iran, Saudi Arabia, that will not capture the news anytime soon.
Great. Thank you for your insight. I think we have one last question in the chat. So feel free to enter any last questions. But so this one's from Amanda. What is the level of attention and interest of Yemen by its neighbors and the international community?
I'm sorry, one more time?
What is the level of attention and interest of Yemen by its neighbors and the international community?
When COVID-19 happened, it made every single thing non-priority. Just to summarize. So Syria is not a priority. Yemen is not a priority. Even Libya was not a priority until you have major powers fighting there. But again, COVID-19 is taking over the news cycle, and no one's paying attention to Yemen. Yemen is in a very, very bad situation right now when it comes to food supplies, spreading of diseases, and even the fracturing of the remnant of the Yemeni state. Right now, we have the Southern Transitional Council taking over certain islands and fighting with the internationally recognized government, Abdel Hadi Rabbi Mansour, in addition to the Houthi in the north and Sana'a. The country is in disarray, and the countries that were involved with the intervention, Saudi Arabia and the UAE, seem to be very dissatisfied with the situation, and UAE already leave or still have few forces, and Saudi Arabia is explicitly looking for a way out of Yemen. And leaving Yemen out there with no real solution or protocol framework, the UN failed. That's the bottom line for all these years of negotiations and dialogues. And there's no, on the horizon of the upcoming 2-3 years, I think Yemen will just get worse.
So we have time for a few more questions, and it looks like questions have been coming in. So let's keep at it.
Yeah, it looks like last call popped a few questions. So this is another one from Kayleen, and this is kind of a very broad question, so you can try to answer as concisely as you can. But what are some of the effects we're seeing from the assassination of Soleimani beyond all the immediate effects we already know about?
That's actually an excellent question. I think Soleimani was larger-than-life figure in Iran, and the whole Farak al-Quds, the RGC brand, was somehow associated to that courageous, brave, once-in-lifetime leader who have been fighting the American Satan in Lebanon and Syria and fighting Al-Qaeda in Iraq. And when you lose someone like Qasem Soleimani, you have a problem. Because, for example, Iran's relationship with the factions in Iraq was not really institutionalized. It was through Qasem Soleimani. It was personal relationships. It was Qasem Soleimani picking up the phone and talking to Abu Mahdi al-Muhandis or Khazali or the rest of the militia leaders in Iraq. So when you lose an asset like that, it's really hard to fill his shoe. And this is the problem right now, that the RGC is with the new leader Ismail Qani. He's not really there. We have seen him trying to replace Qasem Soleimani when it comes to relationships. He's not really perceived as the same. He couldn't deliver the same results like what Soleimani used to do in critical moments. But I think if we waited a couple of years, and we might have a new generation of leaders, the younger kids who fought in Syria and fought in Iraq in the insurgency against ISIS, who can fill the shoe of Qasem Soleimani, who can go through the ranks. People right now who are in mid-30s, 10 years from now, they'll be mid-40s. And replace and be the same generation as the generation that fought against Iraq. And these are the masterminds and strategists who have been leading the Iranian insurgency forces around the region. This is how I see it. But immediately, it's hard to fill Qasem Soleimani's shoe in Iraq.
Great. I think we're going to wrap it up with one last question in the chat. So this is from Colleen. Do you think we are at a turning point in Syria, given the recent anti-Assad sentiment expressed by the citizens due to the economic situation? Are the new U.S. sanctions helpful, or what do you make of this?
The U.S. sanctions are helpful because it's targeting the families and the figures of the regime who are committed human rights violations and benefited from the war and killing of innocent people. So yes, it's justice, and I'm glad that the Caesar Act passed. However, that means less money and finances. Even it was already limited, but even these limited finances will be extremely rare, and that will literally make people living in Syria very hard and harder and harder. And I will not be surprised if you see a second wave of migrants, people trying to cross borders, even from the Assad regime controlled areas, because of the lack of basic services, water, electricity, and all this and all the needed basic stuff. Right now, Assad has a lot of problems with the minorities that supported him during the civil war. Assad's entire narrative during the civil war was the Sunnis will take over the country and they're going to slaughter all the minorities. It's whether Christian sects, Alawis, Druze. But when you win the war, well, and we can actually argue what does it mean winning the war if Syria is already totally destroyed. But he won the war. He's the only figure in Syria. He's controlling Damascus, and the Sunni threat and Al-Qaeda and ISIS is not there anymore. But then people need food. His own people needs food. And when people hear Assad's cousin, Rami Makhlouf, speaking about these kind of billions of dollars, and they hear about all these corruption cases, and that the sons and daughters of the regime's leaders are in London and in Dubai and just hanging out and going to bars at night while the country is fully destroyed, people were getting angry. Even the most loyalists to Bashar al-Assad would get much more angry. And this is what we have seen in Suwaidat. Protests coming from a city that used to be a strong support city or base for Assad. And I think that will definitely increase because of the sanctions and the limited finances that the regime will have.
Great. Thank you for all your answers, Mohammed. I think I'll defer to you, Mark, to wrap up your section, and then I'll end with some closing remarks.
Well, first, thank you to Mohammed. Thank you very much for taking my questions, taking everyone's questions. Big thank you to YPFP for putting this all together. And, I have been doing this podcast for a very long time, so I'm glad that this is the second time around that I've hosted a live session with YPFP. Hopefully next time we can do it in person. But until then, please visit globaldispatchespodcast.com, where you can subscribe to the podcast. I publish episodes twice a week, every week, on topics just like this one and other topics that relevant and of interest to young professionals in foreign policy. So big thank you. I'm going to turn it back over to Jeffrey, and we'll see you next time. Bye. All right, that was fun. Thanks again to YPFP. Hope everyone is okay out there. Let me know what's on your mind. Hit me up with an email. I love hearing from you. And yeah, as I said at the outset, if you're with an organization and you want to partner with a podcast around an event like this, I'd love to hear from you. See you later. Bye.